Yeah, he's told us what to stay away from in terms of the U.S. stock market. A lot of other things going on. Marc Faber, David Faber's here, Marc Faber's here. Got the two of them on the set at the same time. Looking at both of them, it can be a little confusing. But, Marc, let's run through what you actually like. You're not telling people to take this money and stuff it in their mattresses. Where are the areas you'd be focusing on?
Well, first of all, I like real estate in emerging economies. And I'm not talking about the luxury high-end in some of the financial centers like Hong Kong, Singapore, Tokyo, Shanghai, but real estate in countries like Malaysia, Vietnam, partly India, Indonesia, and also Thailand. And then, of course, real estate in Russia, the former Soviet Union. There I see an opportunity with less risk. In Asia, real estate is attractive simply for demographic reasons and because of urbanization. We still have, say, over 700 million Chinese that live in the countryside, 700 million Indians that live in the countryside. They'll come to the cities. And so real estate should be fine in the long run.
I see the second item you put on your list was gold and the gold stocks. We just saw that gold price is down better than 2% today. Pretty volatile right now.
Yes, I said to you earlier on that we should expect a significant correction. The bullish consensus on gold is 90%. But let me explain you my case for gold. In my opinion, in the Western world, the central banks have no other option but to print money, basically, in the long run. Otherwise, the whole system collapses. And so you have essentially 5 large currencies in the world. You have the US dollar, the euro, the yen, the Chinese yuan, and gold. And all paper monies the supply can be increased very substantially, whereas gold is a relatively limited supply. So you throw dollars into the world, and you have a limited supply of gold, so the dollar will basically, in the long run, depreciate against gold.
When you talk about long run, what are we talking, years down the road?
Well, I think, we started to rally in gold in 2001. We were at $255 an ounce. We went to over $750 an ounce. We're up 3 times. In the meantime, oil from its low at $12 a barrel in '98 is up more than 7 times. So I think that gold is relatively inexpensive compared to especially industrial commodities. The other point I'd like to make about gold is this. Money has different functions. One of the functions is to be a store of value. Now, as you know, we had a tremendous monetary depreciation, a loss of purchasing power of money over the last, say, 50 or even 100 years. And so people will gradually look at gold as a currency that keeps its value. Let's say if we had to go for 10 years to jail, we could just make one investment and we couldn't change while in jail, and we wanted to keep our purchasing power. You laugh. Maybe we have to go to jail one day, being in the financial sector.
Let's hope not.
And so I would choose gold because it may go down, but it will keep its purchasing power. If gold goes down 30%, I assure you the stock market will be down like 60%. If the stock market doubles here, which is possible that in 5 years the Dow is twice as high, then I think gold will go up 4 or 5 times.
Real quickly, you also mentioned cotton, sugar, and natural gas. And there are several people who have pointed out that natural gas just is decoupled from crude oil.
Well, it has decoupled, but it is inexpensive compared to oil. And I think actually the oil market, like the gold market, temporarily is vulnerable. Long term, I'm of course positive about oil because of the demand-supply situation. But I think that natural gas is very inexpensive, and there are ETFs on natural gas. And I would consider going long natural gas and short crude oil. And then also one point I'd like to make, in Asia we have REITs. Let's say in Singapore...
Real estate investment trusts?
Yes, exactly. In Singapore you could buy a basket of REITs. Singapore is the richest country in the world, is in terms of everything considered, security and financial reserves and education, infrastructure and so forth. And you have a strong currency in Singapore, basically. So you buy these REITs, they will give you a yield of, say, roughly 5%. So what do you want to own? A 30-year treasury at 4.6% or REITs in Singapore? I think REITs in Singapore are more attractive in the long run.
All right. right, Mr. Faber, we want to thank you very much for joining us through the course of the morning. Again, Marc Faber.
Have you two been on the same set before?
No, this is a first.
It's a real pleasure.
It's a pleasure to meet you. I get Marc all the time.
You thinking Faber is a better way to say it now?
I may go with the
What
Faber.
about relation? I mean, Cheney and Obama. I mean, what about you guys?
I have no idea. We haven't
Old
compared
cousins?
genealogy.
Dad!
I always admire you because when you are on, I start to work at night. Say it's around 8 o'clock in the evening, Thai time. And so I always see you and your smiling faces, especially Becky's.
Oh,
That's very
Thank you, Marc.
That's nice. Thank you. I'm going to go with David Faber from here. Marc Faber.
Thank you, Marc. Still to come this morning, we'll get this morning's top stocks to watch, including Merck with some numbers out this morning.